Three of Australia's biggest banks just updated their house price forecast for 2026 and 27. Listen up. Westpac, CommBank and NAB all updated their housing forecasts, and at first glance they all look like they disagree. But when you dig past the headlines and go city by city, they basically are all telling the same story. Let me show you. My name is Adam Panisi. I own hundreds of millions of dollars of property, and I do these videos to help you get educated in property. I have free and paid education programs. You can click on them in the link below. NAB says prices will fall this year. Westpac and CBA say the market runs flat. First, you've got to understand the why, because on this, all three completely agree. So two forces hit at the same time. Number one, interest rates. The RBA has pushed the cash rate back up to 4.35%, which is 75 basis points in hikes just in 2026. So higher rates mean smaller loans and less borrowing power. So the number two is the federal budget, which was released in May this year. The negative gearing and capital gains tax changes have scared investors out of established properties. CommBank thinks that tax changes alone just knocked under 5% off the property prices, and they expect that investor lending is basically going to halve. Westpac's got new investor activity down around 34% since the budget announcements. So this isn't a mystery. Rates plus tax changes equals a cooling market. The only question now is how hard is the market going to fall? So here's the national picture for 2026. So capital cities as a whole, Westpac believe that they're going to be flat, and they warned that it could hit what they call an air pocket in the short term. An air pocket meaning not good for prices. CommBank also believe that the market is going to be flat, and CommBank's forecast is a big downgrade from their previous 5% increase that they were tipping back only in March. And NAB is the bear of the capital city prices, down about 2%, with risk skewed on an even bigger price drop. But that flat national number hides the real story, and that is that there's a two-speed market at the moment. Westpac and NAB give us the full city-by-city breakdown, and they line up almost perfectly. So start with the two big cities being Sydney and Melbourne. They are the weak spots, and it's the high end of those markets that are the weakest. NAB has Sydney down nearly 6%, Melbourne down nearly 7% this year. Westpac's a bit softer, but still negative. Sydney down 3%, Melbourne down 4%. And CommBank backs it up. They've got Sydney and Melbourne saying that they're continuing to record falls with the sharper drops at the top end. So across all three banks, Sydney and Melbourne are definitely falling. Keep in mind though, those more expensive properties have already started to fall, which could lead the so-called downturn in those cities. The mid-sized capital cities, however, are likely to still come out on top. So for Perth, NAB is forecasting a massive 14% this year. Westpac, 13%, and Brisbane, both banks agree, up 9%. Adelaide, both banks agree, up 7%. So at least there's some relief, and all the banks agree that those markets are going to increase. Once again, CBA agrees on the direction, but doesn't give us an exact number. Perth, Brisbane, Adelaide, all still growing according to CBA, just at a slower pace. The two biggest cities are obviously going backwards according to all the major banks, while those mid-sized capital cities are still going to record almost double-digit growth. Remember though, that properties can still fall in value even in a growth market and vice versa. Where the banks disagree though is Hobart. NAB thinks that it's going to be up 7% this year, and I probably tend to agree with that number, whereas Westpac is much more conservative and pessimistic, up only 1%. And CBA doesn't put a number on it at all. All in all, Tassie is looking like that it's going to go up. It may be a little bit modest, or it might go to the moon. But honestly, I think from what I've seen in and around Tassie, there's some really great suburbs that I think are going to do easily double-digit growth. So now for 2027, and here is the great news. Considering we're already more than halfway through 2026, 2027 is not that far away. NAB's national growth is back to 2%. Westpac thinks we're going to be up 3%, and CommBank expects that prices will stabilize and lift as lower prices and eventually lower interest rate ease that market squeeze. So the falls stop and the market starts to climb again. So 2026 is, according to all the major banks, the best buying window. There's a twist in 2027 though. The roles are reversed. So they believe Brisbane, Perth, Adelaide will be softer. That's Westpac and NAB both agree on that. Meanwhile, Sydney and Melbourne in 2027 stabilise and start to recover. Westpac is the most bullish on Melbourne's comeback. They've got it bouncing back by 5%. So to wrap up, in 2026, it looks like the major banks all agree that Sydney and Melbourne are going to continue to fall. In 2027, all agree that the market steadies and we climb again. Those hotter cities cool and those two big cities start to back it up and grow. Personally, I'm buying and selling around Southeast Queensland and different suburbs. There are some great opportunities for myself personally to sell, whereas there's also some really great buying opportunities right now in the market. While investors are waiting around for the headlines to say that the market's booming, I'm personally getting into those areas while there's not much competition. Good luck with your next property purchase and happy hunting.